possible to break the supply chain dependence on the China? What will be the supply chain look like in the post-COVID world? Who will benefit from realignment of global supply chain? And do you think India could benefit from global trade and reallocation of investment due to this scenario? So, you know, a lot of talk is going on within the India, like a lot of business will come to India, a lot of industry can shift to India. And this is the common question within all the investor community in India. So, sir, can you throw some light on this? Is India really going to get some benefit out of this?
You know, I think the whole narrative around China has shifted in the US. Pre-Trump, the narrative was China's a huge market. We need to have a part of that market. We need to grow. We need to engage China, influence them, and over time we will do well, and we will influence their behavior. And that was the general view. And that narrative has changed in the last few years. And this is, you know, whether it's a Republican or a Democrat, it's changed where the ideology in China is deeply entrenched. They are a global enemy in terms of their sphere of influence. And in addition to that, we're never going to be able to change their behavior. And in the meantime, they're stealing our intellectual property. And now, you know, the conversations I have with friends and colleagues in the US, whichever political leaning they may have, it's very difficult to see a different view from that. So I think the Chinese recognize that, and they know that in the short term, Trump is going to say certain things because he's only focused on one objective, which is getting re-elected in November, and everything else is a function of that, including managing the pandemic. So the Chinese understand that there is a practical reality to what Trump is saying. But I think if you listen to the substance of what's coming out of the White House, anybody who watched the long-awaited press conference from Trump last weekend, there was really not a lot at the end of it. And I think, you know, when you have 40 million people unemployed and you need to get the economy back on track because you need to win an election, or you want to win an election, and you have China, which, you know, going back to the point that we were talking about earlier, the amount of money that's been spent globally by governments, either through central banks or by the state, the one country which we expected in January to open up the checkbook and spend was China, that hasn't done it, right? So China's been able to deal with this risk by policy, and obviously the nature of the Chinese system is that they can manage a crisis like that in a very different way. So China has many more bullets to deal with any economic risk that they haven't spent. They're not spending anywhere near what the Europeans are spending. They're spending nothing near what the Americans are spending, etc. So when you have 40 million people unemployed and you need to win an election, and your business community is saying, we get all of that, we get all of the concerns, but we need to do business and we need to make a return. And China is still, you know, 1/3 of global GDP growth, and that's not changing. There has to be a middle ground. So I think, in my view, you will see lots of rhetoric, lots of commentary, lots of feeling and emotion about what's going on in China. But I think once we get through the election period, that will die down. I'm not saying that this issue is gone and this Cold War is coming to an end, but I think there's some very, very fundamental practical realities that are not going away. And if you think about what the Chinese want, the Chinese have three objectives at any point in time. One is to maintain stability, and in this order. One is to maintain stability come what may. The second is to grow the economy and grow and improve the quality of living of everyone. And the third is to establish their strategic influence around the world. Now, we know that the way Trump has been conducting foreign policy in the last 4 years, there's a huge vacuum globally. And this is a perfect opportunity for the Chinese to fill the gap on the third objective. So if you're sitting in Beijing right now, actually Trump being re-elected is not a bad outcome.
Anything what you want to say, like what are the next, what Indian investors should think, what are the things which make you to come to India and put your more weightage to India? What are the things you feel like where Indian investor can really feel proud? Yes, yeah, this is the thing I can think a better market ahead going forward.
Yeah, no, I think, I'll touch on some of the points already made before. I think India is in a very interesting place right now because the change in the world is creating an opportunity for India. Right now, it's just an opportunity, and India has to grab it with both hands. And you have to take that opportunity. And I go back to what I said earlier on, the future has been brought forward. And I think it was Manny or Peter who said that India is blessed with a skill set to take advantage of the new economy in terms of language, in terms of education, in terms of the size of the youth, and so on. And I think this is an opportunity to really grow in a lot of those areas. India already has a great position in IT services. Indian talent is around the world. But unfortunately, the key challenge for India remains jobs. And that's a challenge today, and it's a challenge for the next 10, 15 years. And we all know that jobs really primarily need to be driven by manufacturing. Services can drive a lot of job growth, but not enough for India. So I think that's a challenge for India. I think in the short term, the financial system in India needs rebuilding. For the kind of growth we need to see in India, the financial system is weak. There are not enough credible lenders. There are not enough credible companies to invest in for a country of India's size. And I would say this is an opportunity for the authorities to think about consolidation in the financial system. The system was already very, very badly hit by the previous crisis. And so to get to the next stage, you need a healthy financial system. And we all know from our conversations with banks and other lenders that financials in India are very, very conservative, and I don't think that's changing. So I think you need to see consolidation in the sector. And then the last point I'll make, and you touched on it earlier on, is how is the world going to change? And I think in some ways a lot of things are going to change. In many ways, not a lot is going to change. So whether you live in India or in China or in Brazil or Indonesia, certain things are not going to change. People need to find jobs. They need to come to the city. They need infrastructure. They need to improve their quality of life. And that's not going to change. So people will adapt, and working from home is a great option if you live in the developed world or where I live or some other parts of the world. But it's not an option for the vast majority of people that are going to drive growth. And the same is true in China. So I think we have to be very careful not to extrapolate what's happening today with what's going to happen in the longer term. Yes, there will be efficiencies, and if you can save yourself 3 hours of commuting time in Mumbai or 2 hours in London or whatever it might be, the world is a better place, and that will be good. But we have to be very careful to recognize that that's not an option for a lot of people. So we need to adapt, and they will adapt.
One question from my side, but to Peter or Manraj, whoever can address. And in your opening commentary, there was one important thing which Peter and Manraj and Manny, all of the three, have highlighted, that bond yields maybe are trading at 120 times, whereas S&P is trading at 20 times. So this was a big indication about the fact that P multiples are going to rise. So how do you see, in context of the fact that in last 5-10 years, value investing has not worked, and high P companies are continuously getting more and more higher Ps? So at a time when the yields are so low and P multiples, when you are saying 20 times, and India probably also is at 20, 22 times, whatever. So how do you see things panning out? which are the sectors you see that the valuations are going to just hit the roof, or probably investors are going to see a lot of tailwinds, so they'll jack up the prices? And what is the trend you see in valuations from a value perspective and from a growth perspective? And recently I was hearing to Aswath Damodaran as well, and he was putting up data on his webinar saying that value stocks haven't worked, and P which were trading at low P have gone down further lower, and higher P multiples have got re-rated. So how do you justify this kind of dichotomy which is there in the market? Peter or Manraj, if anyone can take up this question, or both of them, please.
Sure. Why don't I just start? So I think, the market of the last 10, 15 years has challenged the whole debate about growth versus value. And when you look at what's happening in the market, not just today, but even in the post-crisis period, what you saw was, relatively low growth rates, very low inflation. So companies that you described as traditional value companies had very little pricing power and very limited visibility in growing their businesses. So this whole assumption that over time growth and value normalize and there are swings that bring both into balance, I think has been challenged for some time, and I think will remain challenged. You heard Manny refer to the tech stocks in the US, the FANGs and so on, as defensive growth. It wasn't so long ago that these were seen as stocks that were trading at very high multiples, that had a lot of growth built into them but hadn't really delivered. So the whole shape of the market has changed, and I share the view that inflation is not a risk for the foreseeable future. And if you put that all together, it's very difficult to see an environment where traditional value, in the way that some people describe it, is going to do well. So I think that whole question, that whole labeling of companies between value and growth has to be looked at.